How to survive the current housing crisis when interest rates continue to rise. Today, we'll tackle a pressing issue for many homeowners, surviving the current stress-filled housing crisis in the face of rising interest rates. The impact of rising interest rates. If you're among those hit hard by rising interest rates, take a deep breath. There are steps you can take to alleviate some of your stress. First step? Review your financial situation and create a revised budget that takes into account your recently increased mortgage payments. Cutting back on non-essential expenses, impulse shopping, and finding additional income sources, such as driving for Uber or having a garage sale, can help bring in more money. Dealing with property value decline. The real estate market can be unpredictable, and declining property values can be disheartening. Always remember, real estate is a long-term game. If there is no urgency for you to move anytime soon, sit tight, and keep making those mortgage payments on time. Over time, market conditions are likely to improve. Real estate, like all other markets, is cyclical. Negotiating with the bank. If you're facing a scenario where your mortgage remains high while your property value has dropped, don't be afraid to talk to your bank, but also don't let them pressure you into increasing your payments or extending your amortization time. Your mortgage is a contract with them. They must honor it. Reach out and discuss your situation. It's been reported that banks have tightened their lending policies. But no one wants you to lose your home. By talking to several reputable mortgage brokers as well as your bank, you may find alternative solutions to help you through this difficult time. Don't sign any documents without a real estate lawyer reviewing them first. Diversifying your investments. While the housing market faces challenges, diversifying your investments can offer added security. Before doing anything, speak with a licensed financial advisor to explore opportunities that align with your long-term financial goals and risk tolerance. Do not take your financial guidance from TikTok or Facebook. And do not rush into signing anything out of fear. The bottom line? That navigating the current housing crisis with its rising interest rates is survivable and doable. Tweak your household budget, stay calm in the face of property value fluctuations, and work with your mortgage lender as needed. And consider diversifying your current investments for added financial stability. Remember, with the right tools and attitude, you can survive the current financial environment and secure a successful financial future. Thank you for tuning in. If you found this information helpful, please hit like, share, and subscribe to our channel. Stay informed, stay prepared, and until next time, take care.